Hello, welcome to my YouTube channel. This is my series and I specially focus on option selling, and I try to follow some rules. I follow some rule like I just focus on one time frame, that is 5-minute time frame. I only consider price action movements, no indicators, nothing else, and I try to study all the candles bar by bar and try to analyze the market, and with help of that I try to understand which direction the market is likely to move. And I will share you all my these are my contract notes on that day and what I have done and what are my use. So I try to analyze each and every bar, and I will let you know what I have done on this day. This is the analysis for the day 13th April 2026, which was an expiry date. So these are and my risk to reward ratio rule number 4 is 1:3. If I am risking 10 to 15 or 20 rupees, I try to take a reward more than that. Otherwise I will put my stop loss to break even and let the market decide in which direction it goes. So stop loss is compulsory. I try to understand buying and selling pressure with the help of bars. What are the bulls trying to do at that moment and what are the bears response in particular to what the price movement are there. So this is my rule number 6 is trade selection and discipline. I try to avoid bad trades. I don't take unnecessary trades or low probability trades. Sometimes I fall into this trap and I have made countless mistakes. Still I am making it and I am trying to learn it. I completely try to avoid counter trends, and this is the thing which I need to learn about avoiding predicting breakouts. And I shouldn't means nobody should assume try to break out in upside or downside. Wait for the confirmation. This is my rule. I always focus on the second leg. Once the first breakout is there, I try to pay close attention on previous highs and lows, and what are the follow through after that. So I have some rules on entry. So once the signal bar is formed, and if I am going to short PE, I means going long, once the high of the signal bar get hits, then I entered selling in PE. And if I am going short, then after the signal bar has been formed, once the low of the signal bar is hit, I sell my CE. This is my structured approach. And let's go directly to the date and try to understand what happened and what I have done. So it was a gap down. I will show you. On that day it was a huge gap down, around about 700-800 points. Okay, but we are least concerned about it because we are trying to focus on what are the behaviors of price in relation to candlesticks. Okay, so as you can see that this is the very first candle, and you can see there is a big wick on the top, and there is a small red body. So my initial plan was to take a pullback, and I was hoping to enter on a downside. But if the system says that you should only enter when the signal bar get hits, you should trade. Okay, so as you can see that bar 1 has been formed, then bar 2 has been formed. After that, there is a bull bar. Bar 3 is also a bull bar, and bar 4 there is a bull bar with a big wick down that. Okay, now so you can see that the bulls were aggressive from the start of the day. Bar 2 didn't go beyond bar 1, bar 3 didn't went below bar 2, bar 4 didn't went bar 3, and you can see that bar 5 was a red candle and there is a wick below. So this is for me, this is an low one sell setup, and this is move, and this can be termed as a pullback. So I was initially going to trade that if the low of bar 5 get hit, I will enter short, but that didn't happen. So I was saved by this trade, and now then bar 6 formed. After bar 6 form, as you can see that it you can consider this as a breakout, and there is bar 7. So sometimes it happens that market tries to push up and trap the traders. So this can be, bar 7 can be termed as low to sell setup. So I had initially thought that if the bar 7 get hits, I will go for a short, and this might be the traps bulls and they have to buy back. But even that bar 7 didn't hit, and bar 8 and 9 got formed. Now as you can see that from 1 to 11 there are 1 2 3 only 3 red bars. So you can see that this can be considered as a leg, and any pullback will have a second leg. So I was saved from going into short, and now I have changed my perspective to going long. So after that, as you can see that this is a leg and this can be a pullback, and you can see that there are bulls, aggressive bulls, just waiting for some opportunity to take the market up, and this bar 13 form. You can see that this is completely a bar, there is completely a big wick and a bull body. So on bar 14, let's check. This is bar 14 and 10:20 when my signal bar, this is my signal bar. Once the price went above this, I took a trade. So at, you can say that at 10:20 I short one PE around 289.15 rupees. Okay, and once and within 2 minutes at 10:22 I got out at 249, and when this was forming, I took a trade, because the reason was taking that this trade was because there is a very small there is a very gap down movement, and I was thinking that once this get forms, the market will go into downside direction, but that didn't happen, and market continuously made up and up. Now interestingly, you can see that this is I shouldn't have got out of this trade, but previous 2 days I was making loss, so that impact was also there in my mind. So I do not want to lose my profit, and this occurred. I took a trade over here, and within 2 minutes I got worried and this bar was formed. I should have waited for some movement, but I thought that it would have gone below or tried to test this break, but that didn't happen. That was a good sign. And now let's try to understand. So this was my trade, and after that I didn't took the trade. So now let's take this consideration. So bar 15 to 29. Okay, as you can see that there is a lot of overlapping, and it is testing the moving average, 20 moving average, and there is a chance, means people think that this can be a pullback, and there might have that the price would go down eventually, but that didn't happen. And I was was worried, because this can be from this from move 1 to 20. You should not go for a counter trend whatever happens. So you can see that I was not in a position, and you should not trade any. This is trading range. It is quite tough to take a call around 15 to 28. It is very difficult to judge in which direction the price will move. If I would have not closed my order at around this, I had missed the big move, and after that this happened. So because I couldn't trade this, and completely I was in a shock that market will come down, and sometimes this happened that buying on a top is actually risky, and I got feared and I didn't trade. And you can see that bar 29 was a break about bar 26, and bar 30 was a pullback, and after that, above that, it could be a good trade. And even if this bar 31 was a break about bar 29, and you can enter at the pullback about bar 34, but I didn't trade anything, and this move happened. So you can see that from 1 to 44 the market keeps on making up and up and up, and then this could have, I haven't taken this trade, but as you can see that this can be a pullback, and above bar 47 there is a reasonable trade which you can take. But even that I didn't took that trade, and you can say that this bar 56 was a breakout about bar 53, and this was a pullback, and after that this was a later day, and we shouldn't enter on a later trade, because now the bears were in control and bears were taking the trades, and there is a lot more overlapping on this trade. So this was my day. So I took one trade and got out at here, and I didn't do anything on this day. So this was my day. That was a learning trade. So see you in my next video, and we will try to analyze